To the program. Let's rewind just a bit, talk about the market in general today. We were briefly below that 6,000 level, still holding on to that 6,000 level to finish. I mean, how important is this psychological level?
I guess first of all, we're coming to the end of May, and traditionally May has been the weakest month of the year for the Australian market. In fact, if you go back to 2000 and crunch the numbers, it is the worst month, generally a loss of around about 1%, but this year we're looking around about flat, and I have to say it has been a tale of two halves. The pre-dividends from ex-dividends from the banks and the post, and pre we were doing extremely well and the market was up around about 2%, and of course post we haven't done so well, so down by 2.5%. So look, I think there's a few seasonal factors in play here, but also in terms of commodity prices, oil has been a key driver, and there have been some massive losses in oil today. We're seeing Woodside Petroleum down by about 3.5% in one session, and that's the biggest in that space. So that's a huge factor in terms of the market. And then you've got the banks as well. Over the weekend, the news around the housing market, around Sydney CBD as well as Melbourne, hasn't been too positive, and I think there's increasing speculation that we could have turned the corner here, and what it means in terms of not only the banks and the stock prices in terms of the banks, but also in terms of Australia's economic performance as well. So look, I think there's a few things that are going on here, but unfortunately they haven't been too positive. And I guess finally we're coming up to the June confession season, where we will see confessions speeding up a notch. But look, on the flip side, we've seen M&A activity really accelerating in 2018, and that's helped to underpin some asset prices.
Yeah, which is what we had expected, in all fairness, coming into 2018. You do raise a good point, because we are in confession season. And Scott, APN Outdoor, I mean, if we're looking for a positive story today, that's one. I mean, guiding, lifting its guidance going forward. I mean, that space seems to be quite hot.
It's incredible. Yeah, revenue guidance up 8%. Well, you know, we talk about profit guidance a lot. That can be cost cutting. That can be lots of machinations on the P&L itself. When your sales are up, that's pure money coming in the front door. And as you say, really, really hot space. This has been one of the great stories of the last 5 or 6 years, is the outdoor advertising space, going digital, being able to grow that, the number of places, times of day, days of week, finding new ways to bring your message to a customer. And that's a really kind of one of the oldest messages in the book, the oldest industries in the book is advertising. They've really done a great job of bringing the digital foray to the people and doing really, really well doing it. Now, whether or not people are getting a little bit too carried away, though, is the question, I think.
Well, and then again, another space that we're seeing M&A activity, or potential M&A activity, Tony.
It is, but I think the other thing with that announcement today was, once they lost the Yarra Trams, wasn't it, a contract, people were a little bit down at the mouth after having optimistic spin for these guys for an extended period. And then they've come out today with an underlying EBITDA number, which from what I can see on Bloomberg, not many people were actually within the range. They were actually below the bottom end of the range. So inevitably got a kicker.
Yep, so that had a great day today. It was up by 7.6%. Perhaps, Julia, we can talk about another story today, Reliance Worldwide. So coming online after raising cash to fund that purchase of that John Guest business in the UK. I mean, is this an overreaction by the market, though, sending shares about 27% higher in one session?
Look, brokers have been extremely positive about the move. And look, this is quite a big acquisition for Reliance Worldwide. I mean, when we talk about acquisitions, there's small ones and then there's transformational ones. And I think this is a major one for Reliance Worldwide. Generally, when you see an acquisition, you want to see that potential for growth come through. And I think the market's pretty excited here, because not only are you seeing complementary products, but also greater distribution for some of the products that are already existing, as well as geographical diversification as well. If you have a look at Reliance Worldwide, I'm not much of a do-it-yourself home improvements type of person, but their major product is Sharkbait. This is a easier plumbing fixture, and I guess one of the amazing things about this particular product is that it's stocked in both Lowe's as well as in Home depot over in the US, and this is quite unusual. Usually you're stocked in one or the other, or if you win a contract with one, the other one won't stock you. So look, I guess it talks about how attractive this plumbing fixture is to the DIY market, that you see an exception in terms of being stocked in both of these hardware stores. But look, I guess the thing with John Guest is that they don't have much of a presence over in America where Reliance Worldwide does. In fact, if you have a look at John Guest, only around about 15% of revenue comes through from the Americas. So obviously there's a pretty easy opportunity here. And then for Reliance Worldwide, they don't have a huge presence in terms of Europe, where John Guest, I guess, has most of its revenue coming through from. So look, a whole lot of possibilities there, and the market loves possibilities and stories, especially growth at this phase of the cycle, and being able to grow, find growth like that makes so much sense. I guess the market really backing this one.
It does expect earnings to be in line with the prior financial year, though it will see a decline in total sales and a 3.6% decline in wholesale sales. So is that Metcash executives just coming out, really want to be transparent, really want to, you know, hopefully, I guess, I was speaking with Michael McCarthy from CMC Markets earlier, who was saying, look, they might have been a bit taken aback by the extent of the selling today.
Look, I think it equates to a profit downgrade today, given that the market was expecting to see earnings growing from its food and liquor business. And the fact that in the last financial year where it reported it had 53 weeks, so, you know, a flat result still means a bit of a decline there, and that's below what the market had been expecting. I guess to put it into context, this is a stock before today's performance, which had risen about 80% in the last 52 weeks. So that's a phenomenal performance from a stock which is facing, as Scott mentioned, the increasing competitive pressures in that food and liquor space. And that's because it's been really the hardware side of the business that's been driving along that share price. But, you know, I think today was a stark reminder that the hardware side of the business only accounts for around about 25% of the revenue, and the bulk of it still comes from that grocery business. So altogether, the market pricing in a profit downgrade here because it was below where consensus was expecting, and that was the share price fall we've seen.
Okay, Julia, quick thought on Investa. Again, M&A activity in that office space here in Australia. Blackstone coming over, making, what do you think, pretty good offer?
It is a pretty good offer, and look, you know, it's not the first one to make a tilt for Investa. In the past, we've seen, I think, Dexus once made a tilt for it, as well as Cromwell. So look, there's been a few tilts in the past, but this bid at $5.25 cash, which is above net tangible asset value, I think it's really a sign of confidence in that office market. And the office market, particularly here in Sydney as well as in Melbourne, have been quite strong. If we have a look at the first quarter, we saw rent increases around about 18% in Sydney, 15% year on year in Melbourne, and that follows on from double-digit growth in 2017. So look, if we have a look at other stocks in this space, they include stocks like Dexus as well as Cromwell, and look, I think it's a sign of confidence in this space. So unsurprisingly, Investa Office Fund doing well.
And Tony, I know that